Hello, traders and investors. Steve Gans here, and welcome to the weekend update on May 18th, 2025. So our markets have had a really significant move up here in recent weeks. Obviously, there's lots of politics that went into this as well. No telling for sure at this stage if they're going to hold or not. But as you will recall, about a week ago, I said the big question in my mind was our 200-day moving average right here, and if we were going to get above that moving average. We gapped above that moving average, that gap right here, and then after that gap, we've just continued to run. We haven't made new highs yet on the market, but we're not very far from them. The other thing you'll notice is that the up days, the volume has increased as well. So that also is a pretty bullish sign. Now, the one thing that's a little less bullish is this RSI indicator, relative strength indicator. Many times when that gets around the 70 mark, you can see that tends to be when we get pullbacks at different times. Right here was one of those. We were in that range here. They're not always significant or severe pullbacks, but when we get what's called overbought, which is usually when we have an RSI reading above 70, that tends to be when the markets might chop sideways or back and fill a little bit. So that's not a bearish indicator. It's just an indicator that the markets are possibly a little bit overextended. So this is what, of course, SPX looks like right now. Let's take a look here at SPY. Of course, it's going to look essentially the same for all practical purposes. And again, same thing here. That reading is pushing right on the 70 mark. And we gapped above the 200-day. Again, SPY is just 1/10 of SPX, the main index. Let's look at volatility. So if we look at volatility is back to pretty much those all-time low areas. When the volatility is down that much, that's essentially telling us that there's no real fear in the market right now. People are not buying insurance. It's all systems are go. Doesn't mean we're always shooting higher, but it means that there's a less likelihood of a big down move in the markets. Of course, anything news-related can trump, pun intended, all of that. So you just never know, but markets being what they are right now, the fear just doesn't exist there. So let's take a look at the Qs. We're seeing very similar patterns in the Qs. Again, we had that 200-day moving average. We gapped above it, and now we're running. So that's a gap and run. Very strong bullish indicator, if you will. Our volume has been higher as the market's been going up. So people are jumping in. But again, that relative strength does show a little bit of overbought, which can just be that the market might tire a little bit. All the people flooding into the market, the money may already have gone in. They may not have more on the sidelines. And that may mean a little bit of a pause in the market, maybe a little bit of a chop sideways, maybe even a little bit of a pull back down. But at this stage, again, pending anything news-related, I wouldn't expect much of a dip or a pullback. The volatility in the Qs we're seeing is very similar. While they're not back to these all-time lows areas, they're certainly back to recent lows. So no real volatility in the Qs either. IWM, the Russell market. The Russell's a long ways from its old highs here. The Russell, of course, consists of more banks and financial institutions, companies that are less volatile than what you might find in the S&P 500 and in the Qs. So as a result of that, you don't see the huge high-flying moves one direction or another. The Russell hasn't even come back to its 200-day moving average. You'll also see that we don't have the the volume spikes in the Russell, although its RSI reading is getting up there as well a little bit. So the Russell's one of those that, again, I might anticipate a little bit of a move higher, but then probably more of a chop sideways. The money that's coming back into the market is going into tech. It's going into the big S&P 500 market, your Apples, your Nvidias, your Googles, your Microsofts, predominantly where the AI environment is in full play. Again, IWM doesn't really have those types of components, so I think the money's really flowing more into those tech areas right now. What that could mean, though, those of you that are options traders, this might be a point to consider some sort of a condor that maybe encompasses a range of the IWM market, since the IWM market is not right now rocketing up and down. That might be a decent environment for a condor, just as a thought. Now, let's look at the volatility on IWM, and it also is back down to the lows. So again, no fear in IWM either. Right now, markets are just all systems are go. There's going to be some economic announcements coming up in the next couple of weeks, and of course, other news could impact the markets. But right now, I'm pretty bullish on the market. I do think we could reach those old highs and potentially exceed those old highs. Again, unless there's some breaking news that maybe some of these tariff talks don't come through as expected, or who knows what else could happen out there in the political environment. So that's going to wrap up the weekend market update at this point. Thanks for checking in. And if you would, please give me a thumbs up, a subscribe if you like this content, you find that it helps you in preparing for your week to have just another thought or idea or opinion on the marketplace.